US banks have changed completely and are now fully supporting cryptocurrency and tokenization. What Michael Saylor said will give you a lot of other information about Ripple and XRP. Some new news and information from Ripple came out today that we did see. 4 big purchases, all with the same goal. I also want to talk about that. Let's start with Michael Saylor right here. He begins by saying that it would be quick for the world to accept cryptocurrency and Bitcoin in 4 to 8 years. This is happening a lot faster than before. We have seen BNY Mellon, PNC Bank, Citibank, JP Morgan, Wells Fargo, Bank of America, and Vanguard. In the past year, all of these have changed from a negative, unfriendly, or doubtful view to a good view. We have news now. Early next year, Schwab will take control of Bitcoin and give loans based on the value of crypto assets. So is Citi. Before, none of the big banks would let you borrow money using Bitcoin as collateral. If you look at the top 10 US banks right now, 8 of them are already lending money in crypto. They have changed their position in the last 6 months. What does this mean then? You have your crypto right now, but you might not want to sell it. You might want to use some of that value to buy a house or make another big investment that will change your life. Soon, you will be able to use your crypto as collateral for a loan when you walk into one of America's biggest banks. That's the world we're about to enter. A world where the banking system doesn't try to stop you from owning digital assets because it is financially good to own them. It's interesting that 8 of the 10 biggest banks want to offer crypto-backed goods now. It's hard to believe how fast it is. It's shocking how big this is. And the effects over the next 12 to 24 months will be huge. That brings me to something we need to talk about before we go deeper. If you want to get ahead of this next big financial change, you can't just guess or hope. You need to move with the same precision that the top 1% uses. To do this, you need to be an XRP Insider's Elite. This is where the real advantage is. You'll get weekly XRP Insider tips, advanced positioning frameworks, and the exact methods that the smartest money is quietly using before the crowd figures it out. If you want to think more clearly, act more quickly, and stay ahead of the game while others are still reacting, now is the time. Put your money on your own growth now. The video explanation has everything you need to get ahead. Let's look at what these banks are really doing right now. Talking about banks getting into crypto is one thing, but seeing proof of it is different. The biggest banks in the world are starting to use CBDCs, regulated crypto, and tokenization. But they are moving at different speeds based on the area and the rules. But they are all going the same way. Digital tracks, on-chain settlement, tokenized value, and programmable money. First, look at JP Morgan. They created JPM Coin, a US deposit coin on Coinbase's Layer 2. This was the first time that institutions could make live payments on public blockchains. Not tests or studies, but real payments. They also changed their name from Onyx to Kixis and grew their blockchain platform by creating tools like Kinesis Fund Flow, which lets private fund flows settle in real time. And keep in mind that this happens after they have already done cross-border payments, tokenized stocks on permissioned blockchains, and repo trades with large cap companies. That gets us to the point. Wall Street is done with crypto trials. They are now building the infrastructure needed for a fully digital economy. Then there's Bank of America. In 2025, they changed how they manage their clients' money and suggested that 1% to 4% of each appropriate client's account be invested in spot Bitcoin ETFs. Bitcoin is the most liquid and least unpredictable when compared to the rest of the market, so it always starts. But when that door opens, money quickly moves to useful things it can pay for in the real world, like XRP, Ethereum, and Solana. The flow will arrive between 2026 and 2027, and we can already see how people are placing themselves. Now zoom out to see China. ICBC is the biggest bank in the world and plans to build smart banking with blockchain, AI, big data, and the Internet of Things. China is interesting because they support blockchain technology but don't let their people trade cryptocurrency. That's how it always is. The technology and power are what governments and institutions want, but they don't want stores to get a lot of money really quickly. This is the part that people usually don't get. Keeping stores in their debt system is always going to be a goal for governments. That's why governments keep people from getting certain assets. That's why a few years ago, XRP was taken off the trading lists of almost every exchange. For this reason, China supports blockchain, but does not allow people to own cryptocurrency. But what about institutions? They are being loaded. They are positioning. They are getting ready for the next 10 years. If I were given $100,000 and asked where I wanted it, crypto, stocks, or bonds? I have never heard an easier question. It's taking a long time for stocks to move. bonds are no longer alive. All of the world's most important banks and money-related companies are starting to use crypto. It's clear which root has grown the most. They know that. This is why they are limiting the ability to buy things in stores. They have power over you when you are broke. You are in charge of yourself when you have cash. That's the real reason for this fight. The Agricultural Bank of China is helping to test the digital yuan. They are giving wallets and payment systems that work on blockchain-linked infrastructure. The Bank of China and China Construction Bank are both doing this. They are connecting straight to the People's Bank of China's Digital Currency Institute to create systems for data, cross-border payments, and tokenized settlements. Once more, this is not public crypto. They aren't allowing regular people to buy Bitcoin or XRP, but they are working on the technology that will make it possible. Change to Japan. Mitsubishi UFJ Financial Group gave out Japan's first blockchain bond. They also turned a $80 Osaka skyscraper into digital real estate investment goods. This is happening all over the world. Tokenization isn't an idea. It's happening now. HSBC is strengthening its blockchain security and tokenization plans. They expect that public chain tokenization will grow a lot in the next 2 to 5 years. BNP Paribas keeps working on making tokenization features for funds and bonds. Citi is growing its token services, which will let big companies use programmable payments, tokenized accounts, and on-chain settlement. These institutions are worth over $1 trillion, and they are completely rebuilding the banking system. A lot of these banks were fine working with Ripple as long as they knew their place, which is kind of funny. But now that Ripple is trying to get a national banking license, the tone has changed. Ripple is a company that banks don't want to have as competition. Ripple is the partner they want. Now that Ripple has its own banking license, it competes with all of the big banks like JP Morgan, Citi, Wells Fargo, and Goldman Sachs. So, of course, people are pushing back against it, but the speed is still going. BlackRock even said that Bitcoin is being bought by actual countries or sovereign funds at prices of $120,000, $100,000, and $80,000. They are building long-term positions because they know what will happen next. At the same time, the CFTC in the U.S. just revealed the first government-supported spot crypto trading site. This is the start of the process that will allow the regulation. The Wild West age is coming to an end. Schools and other organizations want safe tracks. They want rules they can follow. They want to build a system that will stop another FTX crash from happening, and they are getting it. The speed of this full change is what makes it even more interesting. For a long time, people who study these things thought that turning assets into crypto tokens and having institutions fully accept crypto would take a long time, with a rollout lasting over 10 years. But when you see JP Morgan, Citi, HSBC, MUFG, Bank of America, BNP Paribas, the biggest money-making companies on the planet, moving all together and speeding up, you know that this is no longer a trend. It's a world-coordinated pivot. And what's crazy is that they act like this is all just a trial on the outside, just study, just pilot programs, just exploratory tech upgrades. But these banks are already clearing, settling, tokenizing, and reworking the whole system of global finance in ways that the public isn't even aware of. The best example is JP Morgan. At first, JPM Coin was just a fancy payment token used only within the company. Today, it is being used to move billions of dollars across public blockchains. They changed the name of Onyx to Kixis, increased fund flows, made it possible to use tokenized securities, and set up a system for real-time asset movement across private and public lines. This is the most powerful bank in the world, publicly using blockchain on a large scale, but still treating it like a test. Now, they are saying that these things will soon all be tokenized. Deposits, treasuries, money markets, and company liquidity. This is the point where people get confused. It's not just because they believe in blockchain that banks are using crypto. They're using it because the old system isn't capable of handling the speed and amount of the digital economy. Unless banks completely rebuild their internal plumbing, they can't compete in a world where money moves globally 24/7. Over the next 10 years, the organizations that have systems that work like the internet will be the most successful, can be programmed to make automatic global instant decisions. Others are left behind. Ripple's bigger plan is what we just talked about, because these purchases are what Ripple needs to take part in this global infrastructure race. Ripple isn't trying to be a payments company anymore. It's more than just the XRP business. It has grown into a full-scale provider of digital banking infrastructure, the main part of the system that allows value to move around the globe. It's obvious from the purchases. The most important one is G-Treasury. This is not a new business. It's been around for 40 years and is used by the world's biggest companies for their business treasury systems. When Ripple got G-Treasury, they did more than just buy a product. They bought a way to get to know the world of business finance all over the world. Every day, treasury teams handle trillions of dollars worth of liquid assets. They manage everything from cash positions, global FX, credit lines, repo markets, internal transfers, regulatory compliance, risk analytics, and all other parts of a business's financial operations. Ripple was able to help banks move money before this purchase. Ripple can now help companies handle, move, optimize, and get a better look at their whole liquidity infrastructure. It isn't payments anymore. It's a way for businesses to manage their money. G-Treasury's connection to Ripple means that business CFOs can now use digital assets and on-chain rails without having to know a lot about crypto, handle wallets, or worry about the difficulties of blockchain. That by itself is a chance worth $1 trillion. But what this makes possible is what really changes the game: the ability of businesses to get into a global loan market that is faster. Every day, repo agreements range from $2 to $8 trillion. If Ripple Prime can link real-time clearing with Treasury Insight and round-the-clock liquidity optimization, Ripple will be part of the daily heartbeat of global finance. This isn't just a theory. This is where the world of institutions is already headed. Then add Rail, a stablecoin, and a way to pay people. This gets rid of a big source of tension. Holding stablecoins, opening crypto bank accounts, or managing blockchain processes are not things that most companies want to do. Rail gets rid of all of that. It gives business groups a single API so they can send and receive money in both traditional and digital ways without changing how their own bank works. It's a secret blockchain, the type that institutions like. Why is this important? When businesses can quickly move money anywhere in the world for little cost without needing stablecoin custody, special accounts, or upgrades to their systems, they will naturally start to use digital methods for more of their payments. And once they see the speed and cost benefits of the new system, they won't go back to the old batch settled method. Rail is the first step toward on-chain settlement for businesses becoming standard. Palisade is next. It increases the number of places Ripple can use to store its assets. Institutions have been calling for one thing: a custody setup that is built for digital operations with lots of trades, lots of assets, and high security. Crypto platforms are not wanted by them. They want a system that is safe like a bank and can work with everything. Keeping up with payments, compliance, asset servicing, company treasury workflows, and payments. That's exactly what Palisade gives you. It's hardened for organizations, but it's wallet as a service. This is important because custody is the center of all things bureaucratic. There are no changes. Tokenization, cross-border payments, settlement, corporate finance automation, liquidity movement, and custody, unless it is very strong. Ripple takes away a big problem for banks, fintechs, and companies that want to move into digital assets by owning this layer. Counterparty risk, compliance, technology, and institutional control all improve. Ripple Prime, which was Hidden Road, comes next. This is like a prime broker for digital assets, but it's made for companies that want to trade OTC, handle liquidity, and execute trades across many different assets. This is the last part of Ripple's all-in-one guide for institutions. They now have control over the payment, liquidity, treasury, custody, and execution lines. For the first time, a crypto origin company has built a system that is similar to, and in many ways better than, conventional world finance. This is why banks are worried about Ripple going after a national banking license. Once Ripple gets a license, there won't be any middlemen. Ripple turns into the bank, the source of liquidity, the infrastructure, and the engine of settlement. When needed, XRP becomes the native liquidity rail that sits beneath that infrastructure, and this is where the stress starts. When Ripple was a vendor, banks were fine with it, but now that Ripple is trying to take banks' business away from them, acting as a rival and directly challenging the old models of correspondent banking, banks are not happy. If Ripple can instantly settle payments, move liquidity across borders in seconds, do OTC trades, hold onto assets, and handle treasury operations for the biggest companies in the world, what does that mean for banks that still use slow, outdated technology? They just can't do it. This is why banks like JP Morgan, Bank of America, and Wells Fargo are worried. They know that Ripple is no longer a partner. It is a danger to the way their business makes money. BlackRock says that at the same time, sovereign wealth funds, which are the biggest money pools in the world, are quietly buying up Bitcoin. I am not going to trade it, building it up, getting ready for a major change in world assets. When sovereign funds invest, pension funds, foundations, and other big organizations follow. At the same time, the CFTC said that the first crypto spot trade platform with full government support and regulation had been created. This is the U.S. finally allowing the creation of big cryptocurrency markets on U.S. soil. Not out to sea, not hidden, not behind any tricks. This is the beginning of a crypto market in the United States that will be structured and controlled. And that's where the real action starts. Because as soon as the U.S. government opens this door, the world's largest businesses will be able to take part without worrying about breaking the law. This is not advice about money. Let's talk more about the part of this that nobody has talked about yet. The second layer gets liquidity route benefits from XRP. Look, the clear things are what get everyone's attention. Exchanges, the people who make the market, and banks. But the real leader is hidden in the infrastructure that comes after the first wave. These are the things that are activated once the liquidity factors reach certain levels. And you know what? We're close to those limits right now. For the past 10 years, liquidity routes have not changed. They have been slow and broken, and they are stuck on old tracks. But something changed in the last 3 months. Corridor spreads that began to squeeze. The people who trade in the market began to add more complexity. Test rails had less slippage. And organizations that had kept everything quiet all of a sudden started working together as if they were waiting for a signal that had just been given. What does it mean? That means that XRP is going to stop being tried. It's being put in place, set up for throughput and for so many transactions that the old models will break and the world system will have to update whether it likes it or not. The best part is now here. None of this needs to be done by the retail sector. It doesn't depend on hype, popular news, or celebrities, and it doesn't need to be used by a lot of people. This event turns something on in the back end. A technical switch flip that isn't seen by the public. I'll show you an example of how that looks. Recently, some unusual tests of liquidity started to show up in certain areas. Corridors that have only moved in the past when central banks are involved. These tests were interesting because they were meant to stress test high-frequency delivery. Unless you're getting ready to scale, you don't test that. And you can't scale unless you do something about execution right away. Then, all of a sudden, it became harder to close a deal. Latency fell, messaging methods that are in sync with new automation triggers. It was similar to seeing a system get ready, like how organizations get ready before they start making real settlements. Now add ETF imports to the mix. The numbers we're seeing now aren't just temporary interest. These are inflows that are controlled, timed, and measured. Allocation footprints, institutional marks. You can almost see the capital's destination before it gets there. This brings us to the second point of shock, alignment of derivatives. When a new asset class is about to play a bigger part in global markets, derivatives start to take on structures that predict where future flows will go. We see that. The open interest is getting bigger. A strike grouping is forming, leverage is moving to longer time frames, volatility is becoming stable. People who trade options are placing themselves like they know a big change is coming, and the big ones are too. Also, keep in mind that derivatives can't tell you how retail businesses feel. They make predictions about how cash will behave. They are ahead of it. At this moment, they are screaming a single word. The system is getting ready for a big event where it will be able to quickly add liquidity. But this is the part that most people can't see unless they're tracking institutional traces. Bullish tails aren't really driving this. They are needed. The markets around the world are breaking. It's getting too hard to handle liquidity fragmentation. The speed, volume, and size of the future can't be handled by old rails. People in charge know it. It is known by institutions. It is known by the people who provide infrastructure, and they don't want to prepare. They have to get ready. Keep an eye on cross-border settlement. Watch how the automation events are changing to digital liquidity providers. Watch as money slowly but surely moves out of static, time-delayed rails and into on-demand rails. This is not happenstance. They are signs. And when the system sends this many signs at once, it has meant the same thing in the past. A reset event will happen soon. Now, here's something that is even more important. We're getting to the point where differences in information will be huge. The people won't know anything new. Institutions will get ready for things that haven't happened yet. A very small number of people will know exactly what is going to happen before it does, but only if they follow the facts and not the stories. Check out the macro energy that's being created around the liquidity waves. Take a look at how things are being grouped together. Check out the supply tightness on the order books of institutions. These are the same patterns that show up before parabolic expansions. Not because people are excited about them, but because liquidity has to be redirected into more efficient settlement routes. XRP is the way to do that. This doesn't mean that moonshots will happen right away. It means structural alignment, which is the type of alignment that moves an asset from speculation to infrastructure. When that happens, all will be different. People don't even realize that these things have changed until after the changes have happened, how prices are set, how money comes into the market, and how the market itself is structured. We're just about to experience that change. It isn't noisy. It doesn't show off. It isn't popular on social media. But the signs that we can't see are lighting up so strongly that it's hard not to pay attention to them. You will see more positioning and tightening, as well as more quiet accumulation and deeper liquidity.